Hello everyone and welcome to the specialist trading presentation of our Elite Emini Trading College. Now in this webinar, I'm going to be sharing with you why you really should, in my opinion, be taking this course for the following year to get your trading back on track. And most specifically, I'm going to be talking about and sharing one of our best strategies, two of the main rules to one of our best strategies. That's strategy number 4. And we're going to be, once again, revealing the two main rules to this strategy today so that you can actually see how powerful they are and why you should be taking this course. Now, if I show you this example right here of a 5-minute, I should say 15-minute chart in the E-mini just a couple of weeks ago, we see here that strategy number 4 and the two rules that I'm going to be sharing with you today generated a signal right here to go long, even when it looked as if the market was going nowhere. And later on in that day, it would have generated a profit of 12 points in which you would have had to work with. So this is a great presentation. Once again, if you're really serious about taking your trading on track for 2017, I strongly urge you to get involved in our new E-mini Trading College. So welcome once again. My name is Steven Primo. I am the president and founder of Specialist Trading. If you're new to my presentations or you're just beginning to watch us in our weekly webinars, you'll see that we're all about educating you as a trader. Our goal is to simply teach you the same things that were taught to me, the same things that were able to turn my trading around, and hopefully be able to turn your trading around. I know many of you may be really frustrated or suffering right now in your results. Now, I say this because my first couple of years of trading, even though I had been trading for roughly 40 years now, and I started my career on the floor of the Pacific Stock Exchange, I was a market maker there for roughly 9 years, a specialist, but I struggled my first 2 years of trading. I traded through the crash of 1987 and the bull market that followed, but I really had a really difficult time, probably many of the same things you're going through, I went through myself. So I've been trading for that amount of time. I know what works. I know what doesn't work in terms of consistency. And so this is what we do. We basically mentor you and teach you firsthand, and we work with you step by step so that you can ultimately put the power back in your hands through sound, fundamental education. So as you'll see later on today, we're all about educating you as traders so that you can make your own trading decisions. Now, before we give you all this information today, we ask that you please take a moment to view our disclaimer. I'm going to show you a lot of performance results and a lot of the things that are offered in this college, but please remember that we can in no way guarantee that any of the results I'm about to show you will be repeated. Once again, we are required to show you this, so please take a moment to view our disclaimer. And while you're taking a brief moment to view that, I would also like to take this time to invite each and every one of you to follow us on Twitter if you haven't done so already. This is our handle. You may want to copy that down. Each day I post new information. In fact, last week I posted some information about a buy signal that was generated from one of the strategies in the college that I will be teaching you in this E-mini college. And it was a buy signal in the E-mini futures or the S&P 500. And as you can see, the market has continued to go higher and higher. So I'll talk about that in just a few moments. But feel free to follow us on Twitter. A lot of great information there on a daily basis. Okay, so let's begin. And I want to start off by sharing with you what I learned trading on the floor of the exchange, because as I stated earlier, I had a very difficult time. My first year or two, in fact, I didn't think I was going to be on the floor for that much longer of a time because I was doing everything I had been taught. I was going to the seminars, I was trading volume, I was looking at support and resistance, I was looking at Fibonacci, all the things that are supposed to work, right? Looking at all the institutions, what all the big money's doing, listening to all the news and getting all the earnings and all the economic indicators straightened out so I knew what they would mean with the market. But nothing was working. Well, sure, it would work every once in a while, but the times it didn't work, I usually gave everything back. And it just was really frustrating and discouraging. And I was lucky enough to come in contact with two specialists on the floor themselves. They had been trading roughly about 40 years each. They saw how much I was struggling, and they taught me the things that had sustained them so that they were able to trade 20, 30, 40 years down the road. And I owe my longevity to them because of what they taught me. I really believe that's the cornerstone and the foundation for making me a consistent trader. So here's what I learned. And my mentors taught me this, and this is what I teach you in our college course. They said, Steve, successful trading should be non-subjective. So what does that mean? Well, it means that two traders, when they're looking at the exact same chart, should come up with the same scenario. I mean, how many times have you looked at a market, either at a chart or just thought about a particular stock or particular market, and you talk with someone else and they have the exact opposite idea of what it's going to be doing from you. All right, this is where the subjectivity comes into it. There shouldn't be that much discretion. You should be able to look at a chart and know firsthand exactly if you want to be a buyer or a seller. All right. Secondly, they said that successful trading should be consistent. Well, now everyone knows this and wants to be consistent, but consistency really means that you allow for some small minor losses from time to time, because that's okay. That's perfectly normal. I mean, that's no different from an athlete, striking out every once in a while. It doesn't mean that they're not a great baseball player. It just means that it's perfectly normal every time they're not going to hit a home run. And that's the way your trading should be. It should have a 2 steps forward, 1 step back approach. And the reason why is because most traders do the opposite. They pay enormous amounts of money, tens, 20s of thousands of dollars, or have these subscriptions for years and years where they're looking for that big home run. And that's not what consistency is. That's more of a gambling approach. So we're going away from that. We're looking just for these small singles, all right? That's what consistency means. 2 steps forward, 1 step back. So they also taught me that successful trading should be as simple as possible. And you'll be amazed once you become a member of my courses how simple our techniques are, but how well and how powerful they are. If you've ever looked at traders or subscribed or purchased these, multi-million-dollar systems, and you see how convoluted they are and how complicated they are, because it's just too hard to follow. In fact, many traders, if you study them, who've been trading for a relatively short time, from 5 to 10 years, their trading plans are extremely complicated. But if you look at the traders who've been trading a minimum of 20, 30, 40 years down the road, most of their trading plans are extremely simple. In fact, you look at them and you think to yourself, that's it? That's all we're doing? And that's what we're talking about. They should be as simple as possible. Most of our trading plans have anywhere from 3, 4, 5 rules tops, maybe 1 indicator. Some of them have no indicators. And we're just looking at patterns, all right? That's what leads to successful trading. But finally, what they taught me, that the most important thing that successful trading should be is that it should make you a part of the process. Now, in my opinion, this is the single most important factor which keeps us away from our success as traders. All right, it's not the system, it's not the entry, it's not the money management. It's the fact that you take yourself out of the game. You're not making yourself a part of the process. You are relying on someone or something else to tell you what to do, how to trade. I mean, think of it. Think of your own decision-making process and how you trade whatever market you're thinking of. Do you go to a subscription service which tells you what to buy or sell that day? Do you listen to some trading guru either online or on TV telling you what he thinks of the market? Do you have tons of indicators that are all lining up that tell you when to buy or when to sell? Or do you listen to outside sources like news? You can't make a decision until the news tells you what you should do. This is all basically taking yourself out of the game. And you're telling the markets, I don't have enough knowledge or experience or the wherewithal to actually trade on my own, so tell me what to do. And that's the reason why most traders fail, because you're basically coming in right away with a loser mentality. You're saying to the markets, I can't do it, tell me how to trade, tell me what to buy or sell today. And that is a recipe for disaster. And trust me, I know this firsthand. I'm not trying to be arrogant and condescending. This is the way I used to trade. I used to listen to all these things and look for all these signals and tell me what I should buy or sell, or how I should buy or sell, where to enter, where to exit. And it was basically, a loser's mentality. It wasn't until my mentors taught me to become a part of the process, to take all the information and then make my own trading decision, is when I started to become consistent. So this is what we teach all of our students. This is what the college is based on, giving you the sound, fundamental education that's very simple but powerful, that has stood the test of time, and then working with you as your personal mentor so that you can ultimately make your own decisions, and then you won't have to rely on anyone or anything else to tell you how to trade. You'll be able to know firsthand what you're doing that day, where you're going to exit, where you're going to enter, based off of information that we provide you with, okay? So these are the cornerstones of successful trading. Not some $1 million system that you have no idea what it's based off of. Not some supposed trading guru who never loses, who has $1 million idea. Not some guy on TV, or not even some indicator, or not even news events. We don't follow any of those things. Remember, we want to keep things as simple as possible. So we simply strip those things out of our trading plan. We only listen to one thing, and that's the market in front of us, okay? Now I'm going to share with you entirely what's in the Emini College. We're going to actually reveal a couple of the rules to one of the best strategies in the college. Okay, I'll show you how to implement them right away. But remember, we are an educational company, so being that, we're going to conduct this as a class. So if you happen to have any questions, which I'm sure you will, that's fine. I want to take all of your questions, but kindly wait till the very end, okay? I'm going to share with you why you should be taking this course and all the reasons why you should be a part of this course. But wait till the very end to ask questions, and I promise I'll go through each and every one at the end, okay? The only question I will answer is the most common one, and that is this presentation being recorded? Yes, it is. We record all of our presentations. If you're having technical difficulties, I know some people were earlier today, or if you have to leave early, don't worry, you can request a link from Pro Trader Strategies. They will provide you with a link to this recording, okay? All right, so once again, if you joined us late, wait till the very end to ask any questions. I have a ton of examples to share with you, and so we don't want to slow down the presentation. Remember, we are an educational company. My goal is not to force feed you signals. I mean, even though we will provide you with signals, we do that as an educational source so that you know what to look for. In other words, we're kind of, having an open book test. We want you to examine to know if you're in line with what we've been teaching you. And so, but it's not to force feed you or have you blindly take these signals. That once again will lead you nowhere. So what we're trying to do is teach you these things so that you can trade with the specialist edge. This is the same edge that turned my trading around some 40 years ago. This is the same edge we're hoping that can turn your trading around. All right, so here's what's offered in the Emini College curriculum. I'm really excited about this, and these are the main reasons why you should be taking this college course. In week one, we're going to talk about the foundation and the building blocks of Emini trading. This is extremely important, probably different from anything you've ever heard before. It's not based on any news. It's not based on support and resistance, all the things you've heard of before. We're really going to be talking about the foundation and the concepts you should be following. These are the things you need to know. In fact, we're going to go over some of the tools and techniques that are offered in the college. Firstly, here's edge number one. This is a simple tool designed to place you on the right side of the market in any time frame or in any direction. So if you like to trade the E-minis on a weekly basis, or if you like to trade the E-minis in tick charts, you need this tool. Here's a perfect example. Here's a 5-minute chart of the E-mini. How many times have you done this before? Where you say, well, okay, in this 5-minute chart, we gapped up tremendously and we're going higher, but now it looks like we're rolling over. And the chat room or the trading room I subscribe to says we should sell here because we're going to come down. In fact, we may come all the way down here and fill this gap. So these are the ways I was taught, and so I'm going to sell right here. So you jump in and sell, and guess what? It continues to go higher and higher and higher. Does that look familiar to anyone? All right. We're going to give you a simple tool that has a high level of consistency that will keep you out of scenarios like this. Now, edge number two. Another technique designed to fine-tune your entries, resulting in high percentage trades. We have found that many students come to our programs in colleges and they actually have a strategy that's okay or technique that they trade that's fine. It's just their entry technique that's faulty. Well, this is one of the beauties of this college. You'll be able to add all these things either onto our strategies that we teach you or onto your current trading method. So you can be trading a multiple type of techniques and methods, each with high consistency techniques attached to them. For example, here's another 5-minute chart of the E-mini. Now let's say that your method or even one of our methods says that this should be sold somewhere around here. We are in the area to sell the E-mini on a 5-minute time frame. Okay, now if you use a standard method, which is a breakdown of, let's say, a double bottom, all right, that's usually where a lot of people like to sell because they love to look at support and resistance, which once again we do not subscribe to at all. In my opinion, in nearly 40 years, I've found no consistency in trading with support and resistance, okay? Because one trader's support is another trader's resistance. Let's say you had seen this as some type of support, and once you broke it, you wanted to sell, okay? So you sell, and look what happens, okay? Once again. Now, this doesn't necessarily mean that it's a bad idea to short. It's just that your entry technique was faulty. Well, with this technique we share with you, you could have still looked at this as a shorting opportunity, but instead of entering here, you would have entered here. And instead of being stopped out, you would have been able to enter at the very top and taken advantage of this smart move to the downside. So once again, many times your idea isn't wrong, it's just that your entry technique is faulty. So this is one of the things you need to have here that we're going to be giving you in the college as well. We're also going to be sharing different exit plans, okay, a variety of both aggressive and conservative exits. And this is just one of our techniques for exiting, as we see here in this 5-minute chart. This is an actual buy signal that was generated. Now, depending on which type of trader you are, remember, we want you to make the decision. We just give you all the different variables. You can either exit right here at exit level number 1, exit level number 2, or exit level number 3. All right. Once again, there is no wrong way to trade. The only wrong way to trade is to depend on what someone else is telling you what to do. We never tell our students what to do. That's why you need to take this course. We teach you all the different ways in which to trade and then work with you to help you decide which is best for you. Now, obviously, if you like to get in and out of trades quickly, you would have chosen exit level number 1. If you like to trade and try to get as much bang for your buck, you'd choose exit level number 3. Is one better than the other? No. The only thing that is wrong is when you don't feel comfortable trading. So pick and choose whatever feels best for you. They all have high probability levels for success. Now we also give you 4 different initial stop placements. You know, as we said, some traders are very conservative, so they would want to use our conservative stop placement levels. Others are more aggressive. They're willing to take more risk, all right? Then you'd want to take our more riskier stop placement levels. Once again, we're putting the power in your hands. We're not saying you have to enter and exit here in all these different places. That's up to you to decide. That's why it's so important to take this course. And we're also giving you 3 different moving stop placements, because a lot of our students like to use a moving stop as their exit point. They want to trail the market as much as they can and see if the E-mini continues to go higher and higher and higher, they'll wait until they're stopped out to exit. So we give you 3 different moving stop placements. Lots of great ways to trade the E-mini. All right, so that's week 1. You see, that's a ton of information just in week 1. So that's just right off the bat, you're going to get all this great foundation and building blocks. Now we get into the meat and potatoes, what everyone's looking for. And one of the reasons why I'm sure a lot of you want to be involved in the college is we start going into the strategies, okay? This is E-mini strategy number 1, and it's based off a pullback type of style. In other words, we're looking for a trend, but looking to buy in the sell-offs within the trend, or looking for a downtrend and looking to sell in the rallies within a downtrend. So this is our premier pullback strategy, and it just is based off of a proprietary indicator that we use. Now, if we look at this 5-minute chart of the E-mini, we see here that we're obviously in an uptrend. Now, if we want to not buy on a breakout, we want to buy when price kind of sold off a little bit. Well, these are the most opportune areas right here, right? Well, just off of this strategy, strategy number 1 would have generated buy signals right at the very lows of those pullbacks. Now, here's another signal that can be applied on a daily bar using strategy number 1. This just happened just about a month ago. As we can see, it looks as if the E-mini is going sideways to a little bit lower, but this particular strategy perceived that the market was in a downtrend and that this little sideways to upward action was actually the pullback right here. So obviously, this is the pullback, meaning we want to be selling somewhere around here. Well, strategy number 1 generated a sell signal on this bar right there, which I believe was at the end of October. And as you can see, the market went straight down after that. So it doesn't matter if you trade 5-minute bars, daily bars, or even weekly or monthly bars. Our strategies work in any time frame and in any direction. So that is week number 2. We'll be giving you all the rules and sharing with you all the different ways to implement strategy number 1. In week number 3, we go to probably our most consistent strategy, which is strategy number 4. Now, I'll get back to this in just a few moments because I want to spend a lot of time on strategy 4, giving you a few of those rules. So let's come back to strategy number 4. Now, after week number 3, we go into another strategy, which is our premier strategy for the E-mini on a daily time frame, strategy number 7. And let me show you how well this strategy is. This is our premier strategy because it was designed for trading the E-mini on daily bars. But since our first college, that was a couple of years ago in the E-mini, Students have told us that they have some nice success trading this on intraday trading so as well. But let me just share with you what happened, and this was on December 2nd, okay? This was just last week. As we can see, the E-mini was heading a little lower, nothing great, but on this night of the 2nd, strategy number 7 generated a buy signal, okay? This was just the close of Friday. So as you can see, I took this snapshot just a couple of hours before today's presentation. We've continued to go higher and higher, and just in the 4 days since the signal was generated, we've have roughly about 20-point gain. That's $1,000 per contract. And as you can see, the E-mini hasn't gone lower, so there's really no risk in this trade. The minute you would have gotten into it, it would have continued to go higher and higher each and every day. So this is strategy number 7. Unfortunately, we didn't give this presentation 2 months ago because you could have taken advantage of this really nice trade here. All right, now we've backtracked. Let's get back to once again, the meat and potatoes of the college. That's strategy number 4. This is our best strategy in terms of consistency and in terms of it being able to transfer over onto any time frame as well as any market. And we're going to give you 2 of the main rules to this particular strategy. It only has a total of 5 rules, so we're going to be sharing with you almost half of them today. Now, who is strategy number 4 for? Well, when I was first given this strategy some 40 years ago on the floor, it was for traders looking to catch quick momentum moves, because all of the traders on the floor, when we were trading stocks and we were making markets, sometimes we'd hold positions maybe for 2 minutes. So we wanted to use a strategy that got us in and out really quickly. But over the years, we have found ways devised to hold on to the trade. So you can hold on to the trade for days, weeks, months if you like. And we share with that all the way in the college. Now, this is for all students, from beginners to advanced. So it does not matter if you've been trading a couple of weeks or if you've been trading a couple of decades. Absolutely makes no difference. We have hedge fund traders who have become members of our strategy number 4 course. We also have people that are brand new to trading, that have never traded in their life, because everyone gets the same basic format for strategy number 4 in the college. And then once you understand the format, then we work with you with all the different variables so that you can pick and choose and decide, well, you know what, I'm going to decide to enter here, or I decide to place my stop here, or I'm going to decide to exit here. Because remember, once again, our only goal is to share with you this information, but then help you to make your decision. That's how you're going to become consistent. It serves us no purpose for me to tell you that this is a system and everyone must buy here no matter what the market conditions are, no matter what your account size is, no matter what the range of the bars are. Everyone must buy here, everyone must sell here, and everyone must exit here. I mean, once again, that's a recipe for disaster. That's silly. If that works so well, then 80% of all traders would be successful. But it's actually the opposite statistics. 80% of all traders fail. And once again, it's because you're giving your power away. You're basing all of your decisions off what someone or something is telling you to do. So this is for everyone, no matter what your skill level is. It's a pattern recognition strategy. All right, so we're only looking for a specific pattern. It only uses one indicator, so it's based off of a pattern. Now, its intensity level from 1 to 3, if 1 was the most intense of all strategies you've ever seen, where you basically are just glued in front of your monitor, and 3 was the most relaxed, where you didn't have to do anything, well, it's right in the middle. It's very moderate level number 2, okay? The beauty of strategy 4 is that you can apply it to any time frame, any direction, and I didn't include here, but to any market as well. Once again, our edge is consistency. I'm not going to tell you that every trade is a winner. That would be silly. That would be like someone playing basketball and saying, every time I shoot the ball, I make a basket. That's silly. The best, Michael Jordan, Kobe Bryant, they didn't make every basket. Every actor doesn't have a hit movie. Every singer doesn't have a hit album or CD. They all have failures every once in a while. The beauty is, the reason why they're so great is that they're able to bounce back, and that's the same way with strategy 4. So it's perfectly admissible to have a losing trade every once in a while. In fact, I'll show you just a few moments, but I'll show you how resilient this strategy is for making it back. So our edge here is consistency. All right, so here's rule number 1. This is trading 101, right? Everyone knows this. You must trade in sync with the trend. Everyone learns that the first day of trading, right? But if that were, so prominent and everyone, really believed in that, then why do the majority of traders fail if they know they should be in sync with the trend? Well, we believe it's because everyone is giving you their own idea of what the trend is, how to find the overall trend. We believe we have the simplest but most powerful way to determine what the overall trend is in any market, in any time frame. It has nothing to do with looking at a higher time frame. It has nothing to do with looking at tons of indicators that tell you what to do. It has nothing to do with patterns. Let me show you how simple this is. In fact, here's a generic chart. And someone looking at this would say, well, Steve, there's actually no trend here. The courses I've taken in the past said, well, when we're in a sideways trend where we go lower and then higher and then back down again, this is called a range market. So there's actually no trend, no overall trend. So I'm going to stay out of this market. All right. That's the way most traders trade. Well, that's not true according to what we teach you, why you need to take this course. The way we determine trend is by simply adding a 50-period moving average. And then you ask yourself, but you must ask yourself this before you take the trade. Where is price in relation to the 50-period moving average? Okay. In fact, you may want to write that down. I'm going to say it one more time. You must plot a 50-period moving average and then ask yourself before you pull the trigger with any strategy, any technique, where is price in relation to the 50-period moving average? And once you ask yourself, you'll either come up with two answers. Either it's above, okay, or it's below. Now in this case, price is above. So what is that telling us? It's telling us that the overall trend is up. You see how simple that is? That's all we need to do. We don't need to look at patterns. We don't need to look at a higher time frame. We don't need to look at a different market or have tons of indicators. Just find out where price is in relation to the 50-period moving average. In fact, go back right now and look at your last 10 or 20 trades, okay? And I can almost guarantee you that the reason why you lost money and the losers you had was because you were out of sync with this simple rule. Here's another example here. Someone looking at this would say, well, there's absolutely no trend here. Once again, we're just in a rangy market. That's not the way you determine trend. The way you determine trend, the overall trend, is by simply adding a 50-period moving average. Simple moving average. And then you ask yourself, where is price in relation to the 50-period moving average? Obviously, price is below. So in this case, there is a trend. The overall trend is down. Now, why is this so important? It's because if the overall trend is down, are we going to be a buyer? Absolutely not. That would be like swimming upstream. Oh, sure, you may eventually get there, but it's going to be such hard work and you're going to be exhausted and it's going to be a lot of work for a little effort. So why not swim with the current at your back? That's why we want to use this technique. All right, sure, every once in a while someone could say, well, Steve, I could have bought here and made this amount of money, on the upside. Yes, but it's not worth it because over time, it's like going to the casinos and the slot machines. Sure, every once in a while they'll give you a winner and they'll make you feel like, oh, I'm doing pretty well. All the bells and lights went off and I got a little change in the coin slot, but over time, it really doesn't add up to anything. In fact, most likely it's a loss and you're actually losing money. It's the same way with trading against the overall trend. So if we're above, you're only going to be a buyer. You're not going to even think about selling anything. You'll only be looking for buy setups. All right, now let's go to rule number 2. We are going to be looking for bars that close in the top and or bottom 25% of their range. All right, so what does that mean exactly? Let's show you a few illustrations here. If you see a bar chart like this, now once again, it doesn't matter if this is a tick chart, a 5-minute chart, or a weekly bar chart. But depending on where we close, if we close in the top 25%, that's a tremendous sign. So all you have to do is simply take whatever bar you're looking at, divide it by 4 separate but equal parts, and if you close in that top 25% and you are above the 50-period moving average, that is a tremendous sign. In fact, it's an indication to buy. As you can see here, we're not listening to some chat room. We're not looking at TV or looking at the indicators or wanting to find out what the jobless claims are. We're only listening to the market. That's the only thing you really need to listen to because that's what you're trading. You're not trading any news event. You're not trading against some guy in a chat room. You're trading the market. So why not listen to the market for a change? So right here, if we close above the 50-period moving average and the bar closes in the top 25%, the market, the source of what you're trading, is telling you, hey, I'm most likely going higher. This is an indication to buy. I know a lot of you like to trade candlesticks, and you say, well, how does this apply to candlesticks? it absolutely makes no difference. It's the exact same scenario. We simply you measure the extreme top to the extreme bottom, okay? In this case, it would be the top of the candle and the bottom of the candle, or the top of the wick and the bottom of the wick. You divide by 4, and if you close in that top 25%, that's an indication to buy. It's no different, okay? Now, as you can see here, we are above the 50-period moving average, and we have these bars that close in the top 25% of their range. They're both strategy number 4 buy signals, by the way. And look what happened, okay? All because the market is telling you it wants to go higher. Now here it went a little higher, not that much, but it still went higher, continued to track. Now you could have held on to this, or you could have, we don't know if these are weekly bars. This could have been a large amount of points here. And in this scenario, we went up much higher. So you see how we're putting the odds in our favor. And once again, we haven't listened to any news. We haven't looked at tons of indicators. We don't care about all these advanced analytics. It doesn't, it's silly. Keep things simple. How about the opposite side of the coin? All right. What if we close at the very bottom? Remember, all you have to do is divide whatever bar you're looking at by 4. And this doesn't take a long time. I mean, this may seem as if, well, boy, Steve, I like to trade tick charts. I can't figure this out. Trust me, with a little practice, you'll figure this out in a millisecond. It's that simple. All right. It's not rocket science. And so you simply want to see if you close in the bottom 25%, and if you are below the 50-period moving average, the market is telling you that's an indication to sell. What a great edge to have. What a great clue to have from the market. So if we trade candlesticks, absolutely makes no difference. Divide by 4 from the top of the wick to the bottom of the wick. You close in the bottom 25%, same thing. So now we are below the 50-period moving average, where someone would say, well, Steve, I didn't want to trade this because we're basically going sideways. Now you know we're not going sideways. We're in an overall downward trend. Here's a bar that closed in the bottom 25%. It's telling us it wants to go lower. And look what happens. This is all done without the advent of any news, without any outside sources telling us how to trade. That's why you need to take this course, because you're going to learn things you've never done before. And you're going to see how simple trading can be once you get all these things out of your way. All right, so let's look at some strategy 4 examples. I'm going to share with you exactly how they apply to Emini trading and how these 2 rules were incorporated in strategy number 4. All right, here's a daily chart of the Emini. Let's start with a higher time frame, okay? Where is price in relation to the 50-period moving average? Well, we add the 50, and where's price? Price is below. So are we going to be a buyer here? Absolutely not. I don't care what someone is saying on TV. I don't care what the earnings reports are or who wins the election. None of that matters. All that matters is that the market is below, so we're only looking for sell setups. Now, we have to still have structure. We're not going to sell just because we're below the 50. We have to have structure. So that what comes in the form of our strategies, in this case, strategy number 4. And what do we have here? We have a bar that closes in its bottom 25%. Now, obviously, there are some other bars. Here's one bar that closed in its bottom 25. Here's another one. And I'm sure you're saying, well, why wouldn't you circle those? Why are these not sell signals? Firstly, there are 3 remaining rules in strategy number 4. Remember, it's a pattern recognition strategy. We're looking to meet all the requirements of a specific pattern, and those did not meet the requirements, so they were not valid. But this one was. So a sell signal was generated in October, and we all know what happened after that, okay? Don't need to look at outside sources to tell us how to trade. We have to be in charge of our own trading. All right, that's a daily bar. Let's go down to a different time frame. Let's go down to a 60-minute time frame. And this was in the beginning of November, coming into the second week, just a few weeks ago. This is the first question that most of my new students ask. I say, Steve, what happens when we change direction? Like here, we're going down rather sharply, and then we spike up. Don't we get whipsawed a lot of times? Once again, it's about consistency. Sure, you will have small minor losses from time to time. But let me show you how important it is to be in sync with the overall trend. Because once you add the 50-period moving average, we see here that the first part of the chart we should have been short, and the second part we wanted to be long. Well before we had this rally take place, we knew that we were only going to be a buyer right here. So as we were below the 50-period moving average, look at the 3 sell signals that were all generated. These were all profitable sell signals, okay? And then once we changed, look at all the buy signals that were generated. All of these bars closed in the bottom 25% of the range. All of these bars closed in the top 25% of the range. And they were all valid, and they were all profitable setups. Okay, that was a 60-minute chart just coming into a few weeks ago. Let's look at a 15-minute chart that was a few weeks ago as well. This is the chart I showed you at the very beginning of the presentation where someone would say, well, there's no range, we're just kind of going sideways. I'm going to wait to see what the news comes out and tells me what to do so I know what side of the market to be on. Or I'm going to go to that chat room that a lot of traders go to. I get some good ideas there. You see how that's the way most traders make their decision? You're waiting for someone or something to tell you how to trade. You don't need to do that, okay? Let go of that. That's actually keeping you away from your success. All you have to do in the first case is apply rule number 1, the 50-period moving average. Where is price in relation to that? Price is above on a 15-minute time frame. Do we need to know what's going on in the 60-minute or the daily? Absolutely not. If you want to, you can, but there's absolutely no requirement that says you have to look at another time frame. In my 40 years of trading, I found no consistency in that method. So I'm sharing this with you all today. Just look at whatever chart you're trading and focus on that. Don't overcomplicate things by throwing in different time frames or volume or worry about what the institutions are doing or where their buy levels or sell levels are. Silly. All we need to know is where price is in relation to the 50. It's above, so the overall trend is up. Now we have to look for structure, and that's rule number 2. A bar that closes in its top 25% and meets the remaining rules that we teach you in the college, okay? So a buy signal was generated on this bar, roughly about the 3rd hour of the day, and then it was 12 points to the upside after that, okay? It's that simple. That's all trading is. Our only job as a trader is twofold. And first of all, let me tell you what our job is not. Our job is not to figure out, economic conditions. That's not our job. I mean, leave that for an economist, for, the government, or for, companies, for industry. That's not our job as traders. Why give us a useless task that bears no significance in our trading? Our job is not to figure out what the institutions are doing. We don't care. It makes no difference. Our job is not to see where the support resistance levels are or where volume is. It's overcomplicating things. Our job is simply to listen to the market and to let it tell us through the things I teach you in this college what it wants to do. Does it want to go higher? Does it want to go lower? Does it want to go sideways? And then our second job is to add some structure and jump on board whichever direction it wants to go. Not when we say it's topping out or bottoming out, but just follow it. Once again, the market is not something you fight. It's something you go along with. That's how you become a consistent trader. Now, we can go to a smaller time frame. Here's a tick chart, 1,000 tick bar chart from last month. As we're going lower, these were all the strategy number 4 sell signals that were all valid. We're all closed in the bottom 25%, and we don't have the 50-period moving average here because we were well below, but we are below the 50. Now, just to show you that we're not cherry picking stuff from 2 weeks ago, this happened yesterday, okay? I probably could have given you an example today, but I just didn't have enough time to put together a slide. But this happened yesterday in a 15-minute time frame if you're an intraday trader, all right? We have the 50-period moving average here, and this is the entire day, just about, or I should say, yeah, this is just about the entire day on the 6th, coming into today, the 7th. So as you can see on a 50-minute time frame, the entire day we were above the 50. So looking back in hindsight, someone could say, well, yeah, Steve, it's easy to see that it went higher. But it's also easy to see that the entire day you were above the 50, so you would have known not to sell anything. And these were all buy signals generated using strategy number 4. So you think you could have done well with strategy number 4. And remember, this is just one of the strategies that we are sharing with you in the college. This is why we strongly urge you to take advantage of this college course that we're offering you. Now, these strategies work great on the Emini S&P, as I've just shown you numerous examples. But the beauty of these strategies is that you can also apply them to other futures. Okay, if you like to trade other markets, you can apply them to stocks, ETFs, and the Forex currency pairs. So it doesn't matter. I mean, we have a lot of students that say, well, Steve, I would love to take this college, but majority of the time I'm also trading currency pairs. I'm also trading stocks. That's fine. So you're getting like 3 courses for 1 because they apply to these markets as well. For example, NBL, these were all these buy signals. These were all the strategies we will be teaching you in the college. These were buy signals using these strategies, as you can see here. And They also apply if you want to go short. Now, obviously, it's a little bit more difficult to short stocks these days, but you could apply options. Many of our traders like to use options on our signals. It's perfectly admissible. Crude oil. This was a signal coming into October at the very end of September to go long crude oil. All right, we don't look at any of the fundamental news involving crude oil or the price of oil. We look at the chart. That's telling us what it wants to do. How about the euro yen on a weekly time frame? These are all valid sell signals going short the euro yen on a weekly basis. Now, included with being able to use these strategies and these techniques and concepts in other markets, we're throwing in two extra bonuses. These are two powerful techniques. They are the ATM and the PET-D. All right, let me share with you what the ATM is. ATM stands for Advanced Trade Management, and this is such a powerful, powerful course. It's available only in the colleges, okay? We do not provide this as a throwaway course that you can purchase on its own. It's that powerful. So you will only find the ATM in our college courses. So the ATM is really advanced trade management. Everyone has a different idea and a technique for what money management is. We share with you a technique that I was taught on the floor that has really turned my trading around. Because as we show you this example, these are actual signals that were generated by the strategies you will be learning. And oftentimes, these are the ideal scenarios that we dream of where everything works. It doesn't matter if we're going short or if we're going long, everything is a winner, okay? But sometimes using this exact same strategy, this will happen. No matter what we do, everything turns out to be a loser. The beauty of the ATM method is that oftentimes it will keep you out of these terrible drawdown periods. And we share with you exactly how to do this. I don't know of anyone else who is using this technique. It's a great money management method, and we share it only in the colleges. So we're throwing this in as an extra bonus. Included with this extra bonus is the PET-D. Now, this is one of our most powerful and successful courses we have. This is an entirely separate course on its own. We are throwing this entire course in with the college. Now, the PET-D is something I learned on the floor. At the time I learned it on the floor, we simply called it the formula because it was a formula that we had to calculate each and every minute looking at an intraday chart. But because now we have, high-speed computers and programmers, we've been able to make it into a color bar tool. So we've changed the name from the formula to the Primo Early Trend Detector. That's where we get the title of the PET-D. And as I stated, it's simply a proprietary color bar algorithm. So we take all of the work out of it for you, and we just simply color the bars. We color them either green, because if you see a series of green bars, that tells you that the short-term trend is up. Okay, now remember, we shared with you already how to find the overall trend. Now you're finding what the short-term trend is. And if we have a series of red bars, it's telling you that the short-term trend is down. So now we know what the overall trend is, and now we know what the short-term trend is. Now, as you see here, and as it states, the beauty of the PET-D is that it tells you which direction you should be trading. So now you'll never be out of sync with the direction of the market. And once you know the trend, you can apply any strategy to that direction, any technique that you may already have. It'll increase your odds for consistency even more. But here's the beauty of the PET-D. We've also found another bonus to using this. We can use it as a confirmation tool. So how does that apply? Well, here is an example just of last week of a 5-minute chart of the Emini and 3 signals that were generated using strategy number 4. Okay, as you can see, we have 2 sell signals and then a buy signal that hasn't followed through yet. Now, the first sell signal worked out rather nicely. You would have sold and a quick 3 or 4 points to the downside. The next sell signal in this 5-minute chart obviously was a loss. Remember, from time to time, you will have losers. All right, so you would have been stopped out in this. Let's say you're a little gun shy. Let's say you're a little frightened. You're not sure you want to take the next signal. So how do you know if you should be taking the next one, if the next one's not going to be a loser as well? Well, the PET-D can be used as a filter to confirm if you should take the trade or not. How it works is we apply the PET-D. It now colors the bars, but on the bar that the signal was generated, it has to be confirmed. So a sell signal must color that bar red. As you can see here, this sell signal was colored red, and it worked out nice, 3 or 4 quick points to the downside. This sell signal needed to be colored red, but what color was it? It's green by the PET-D. So the PET-D was telling us that the short-term trend is up. So you don't want to be selling if the short-term trend is up. Even if the overall trend is down, this is an added filter. So we would not have taken this trade and saved ourselves a loss. Now, buy signals, conversely, need to be colored green. If they're colored red, you don't want to take them. But as we see here, this buy signal was colored green, so the pet D was confirming it's okay to take the trade, and look what happened. So instead of having 2 winners and 1 loser, you just simply had 2 winners that day because the pet D confirmed and filtered out the losing trade. This is what you're getting in the course as an extra added bonus, along with different ways in which to trade the pet D. It's a great, great tool. As I said, it's its own course already. We're throwing in this extra course within the Emini College. Now, another bonus with the pet D is that you can apply it long term. Here is a monthly chart of the S&P index going back roughly 22 years, I believe, all right, all the way back to 1994. Now, as we look at this, we see all the peaks and valleys that were made on a monthly time frame, all right? So we see the .com top here and then the crash that followed. Then the market stabilized, came all the way back up until we got to the banking and financial crisis, and then another falling out of bed in 2008. And then we've stabilized up and continue to go higher and higher up until roughly right now. But everyone is wondering, are we getting close to another top? Because we've been going up for a long, long time. Are things going to roll over, and are we going to go into another bear market that will last 3 to 4 years? Well, the beauty of the pet D is that we can use it in a long-term time frame. And it can also be applied for these longer-term trends. Now, we share with you a specific technique on how to stay in the markets up until the last moment, where even though we had 1 red bar here, you would not have exited until here. And you would have missed all this .com crash, gotten right back in 2003, stayed long until 2007, well before the financial banking crisis hit right here in 2008 and 9. And then you would have, at this point, been in long the entire time, and you would continue to be long. So would you like to have the pet D to know when the next bear market is possibly going to be starting? This is the beauty of this as well. So lots of different ways to apply it. All right, so let's just go over the curriculum once again. From weeks 1 through 6, we give you the foundation, E-mini strategy number 1, number 4, number 7. We include the pet D as well as advanced trade management, and then we put it all together for you. Now, another thing we didn't talk about, but that you're also going to be getting as an educational tool are emailed signals. This will share with you once again signals that were generated so that you know what to look for. They are not there simply to blindly take and say, well, you know what, I don't really need to study this information or go to the classes. I'll just take the signals that Steve generates. No, we want you to use this as a learning tool. For example, on the 8th, just a little over, not even a month ago actually, we had a sell signal generated in the E-mini using strategy number 7, okay? Now, this is the email that you would have received. And as you can see here, that's when the signal took place. Now, I'm not going to go into the rules or what actually happened because a lot of people like to reverse engineer it. But on this particular sell signal, you would have had a potential for a 90-point gain in 1 day, okay? And we share with you exactly how to do that. But that's with the E-mini signal alerts, okay? Now, as you can see here, if you go to Pro Trader Strategies website or to my website, Specialist Trading, we have tons and tons of testimonials from people who have taken our colleges or taken our individual courses or individual strategy courses and have finally, for the first time, turned their trading around. So be my guest. Go to Pro Trader Strategies website or my own website and see all the people that have, for the very first time, become consistent in their trading. So let's recap before we go into any more what's offered here and take the questions. Remember, you're going to receive all this information, 3 proprietary mini strategies. We give you the exact stop placements, exit, and profit targets for you to choose from, educational signal service, conservative and aggressive versions you decide. We throw in as extra bonuses the ATM and Pet D courses. And then finally, you're going to have 39, and starting January 1st, that will be 40 years of trading experience in your favor. This is so much information that you really need to know to take you to that next level in 2017. In fact, remember, let's recap what we said earlier. Trading should be non-subjective, it should be consistent, it should be as simple as possible, but what we really offer you in this course is that we make you a part of the process. That's why we really think you need this course, because most traders have never been a part of their trading process. They've never been, making decisions. They've never decided, they always go to a site to tell them what to do or have some signal service or some trading guru, but they never really have relied on their own knowledge. This is why you need to take this course, because you're going to put yourself in the driver's seat for the first time, okay? Trust me, a year from today, you will have wished you took this course. As we go into 2017, I'm sure many of you want to turn your trading around for the very first time. I mean, think back if you had seen this a year ago at the end of 2015 coming into 2016. You would have wished you would have had signals such as what I've just shared with you for the past year to work with and to finally become consistent. Isn't it time to turn your trading around? Don't you think you need these things to really get your trading on the next level? 2017 starts in just a few weeks. A year from today, once again, you will have wished you took this course. So be a part of the college. Join me. I'll be your personal instructor. You get instant access. And I think the best thing about the college is that we're not just throwing this information at you and saying, good luck, best of luck, just email us if you have any questions. You're getting 40 years of experience as your personal mentor in these live classes. Okay, they're live classes that you interact with me. We don't like to have them too big, but we like to have them enough so they still feel comfortable and intimate enough for us to ask questions and interact with each other. So you're getting that as your personal mentor. I don't think a lot of other colleges, can offer that much experience of someone who's been trading these techniques and strategies for that amount of time. Okay, you just saw how powerful all these methods are. Now, the normal price of the Elite E-mini Trading College, which is going to be starting in just a few weeks, is close to $5,000, $49.95. But for all the attendees today, we're slashing the price. We're dropping it down to $44.95, plus we're offering payment plans. So even if you don't want to come up with the $44.95 lump sum, you can come up with a very small deposit and you can be up and running just by putting together a payment plan with Pro Trader Strategies. This also, once again, includes that 1 year of trade signals for educational purposes, but this is for a limited time only, okay? So you don't have to come up with the $49.95, you don't even have to come up with the $44.95. You can come up with a small deposit, put together a payment plan, and you can be up and running with instant access. So here's how to take advantage of that and get your trading on board in my E-mini College with me personally as your instructor. Contact Pro Trader Strategies, as you see right here. That's their email address, trading@protraderstrategies.com. You can call them directly at area code 310-598-6677. Now, the link at the bottom is the link you want to go if you want to get instant access, but it's not a live link. You have to copy and paste that onto your browser. So simply copy and paste that, and that will take you to the link. Will give you a little bit more information. But I think the best thing to do is actually to call Pro Trader Strategies to put together some type of a payment plan. That way you don't have to come up with a lump sum. You can come up with a small deposit and you can still be up and running and in the classes once we start the live classes, okay? So I'm going to leave all this information up here. Remember, that's not a live link. If you'd like to go to the live link, go to the chat box on your far right on the GoToWebinar page, and they have a live link posted there. You just simply have to click that on and it will automatically take you to the sign up page, okay? But I would once again suggest calling Pro Trader Strategies. They handle all of my courses and all of our sales, and they have tons of knowledgeable trading consultants manning the phones, and they can answer any question that you may have, okay? But I will open up the question and answer portion once again, and I want to thank you all for holding off. Now, I see some of the questions here are asking about the different platforms this can be applied to. So remember, we can apply this to TradeStation, to MT4, to NinjaTrader, to let's see, to Metastock, all of these. So you will get the add-ons to change the colors of the bars, the PET D, as well as you will get the buy and sell arrows for the signals, okay? Well, for more platforms and different information, contact Pro Trader Strategies, but it works on all of the major platforms. Let's see, Dejan's asking, my question is, if we implement all rules of strategy number 4 and all rules of the PET D, and trade the E-mini on an intraday charts, should we take each signal during the day, or we have to judge with some other criteria which signals to take or which ones not to take? Well, once again, that is up to you. I mean, here's a perfect example. Usually, because of my schedule, I'll only take 1 or 2 signals in the beginning of the day, and then I stop trading because I'm either giving webinars, I'm teaching classes, I'm answering emails, I'm talking to students. So there is no right or wrong way, as we stated in the beginning. if you put the power in your hand, you can decide how you want to trade it. You don't have to look at other criteria. All the criteria we give you is in the courses. There's nothing else you need after that. Okay, so if you're thinking there's more criteria that is not in the course, no, there isn't. We give you everything. And then it's up to you to decide how you want to implement it. So if you want to trade only once a day, if you want to trade the entire day, that's okay. There's no right or wrong way. So remember, this is the way we're trained. We're trained for someone to tell us what to do. You have to let go of that and say, you know what, I want to trade this way. Great. We'll show you how to do that. You tell us what you're looking for. If you want to trade weekly bars for swing trades, great. We can show you how to do that with our strategies and our techniques. Someone can say, I like to trade intraday on tick charts. Great. We'll show you the best way to do that. And then you can decide how you want to implement it. But we're not going to tell you in terms of a system that this is the only way to do it. You have to make that decision on your own, but trust me, that's what's going to make you consistent and successful. It's not, something to be afraid of. It's something to jump in with both feet, because we've all been taught to take our cues from someone else, but that doesn't really produce successful results. What produces successful results is when you take charge of your trading, okay? So it's a great question, and as I stated earlier, we give you everything in the college. There's nothing else outside of that. You have to pay up for more information or different criteria. It's all there, but it's up to you to decide how you want to implement it. Each strategy comes with a basic format, like a basic shell, all right? You can decide to trade it that way if you like, but most of our students never do. They apply their own type of either conservative or aggressive way in which to implement it, because everyone should trade differently. I remember in the first college I gave, one of the students swore that he wanted to trade the E-mini intraday trading. And he just said, that's the best way I really feel confident for him. And we taught him everything. We structured a plan that made him feel comfortable. And then after a couple of months, we were talking, and I said, how's your trading going? You should be doing very well. And he said, no, I haven't really traded at all. And I said, why? And he says, well, once I practiced and I started to trade in real time, I found that I couldn't pull the trigger. I was too nervous. And then basically what came down to is that he was not a day trader. That wasn't really his niche. His niche was better at holding positions overnight. So once we discovered that and he started to use these techniques and methods on daily bars and weekly bars, that's when he started to become successful and consistent. So there's no right or wrong way to trade. The only right or wrong way is when you're out of your own niche. So we help you find that niche, and then we construct a plan with you to make you feel comfortable. This is why we say you need all this in the course, because I don't think you've ever gone to a course where you've been taught this before. This is why we really say a year from today, you will have wished you took this course, because most of us take these courses, myself included. I wasted thousands of dollars, and this was 40 years ago, trying to find a way to be successful. Literally tens and twenties of thousands of dollars, and nothing worked. Nothing did. It would work a little bit, and then it would lose everything. So I did the very same thing. 40 years later, the only reason why I'm still here is because I'm making my own decisions based off of what I'm going to be teaching you in the college. That's why we really feel you need to come on board and learn this for 2017, okay? Take it from someone who's been using these techniques and concepts for 40 years. It does work, but you have to put the work in. Now, one thing that we do offer, people are asking us about homework. Yes, we will have homework in the course, because that's the only way I know in which you're understanding. It's something that we're not going to share with everyone in the class and say, okay, John Doe here answered incorrectly. We're not going to be doing that. You're going to privately submit your homework examples to me, but I will get back to you and let you know if you're seeing things clearly or not. So this is a college course. You are going to be learning concepts I'm sure most of you have never heard of to get you onto that next level, okay? So once again, my suggestion is to contact Pro Trader Strategies. I realize that many of you, may want to pay with one lump sum, but if you can put together a payment plan, you can be up and running right away if you don't have that lump sum to begin with. So that's great by itself. Plus, we're throwing in the ATM, which is only offered in this college. As an extra bonus, we're throwing in the entire Pet D course. That's an entire course on its own. We're throwing that in as well because it works so well with the E-mini, okay? And you're having nearly 40 years of training as your personal mentor. So we can't think of a better way to get on board for the following year. If you really want to turn your trading around, most of us start out at the beginning of the year with all these goals and hopes and dreams, and most of us never meet those because our trading suffers and we're following the wrong rules or implementing the wrong techniques. If you want to get back on board a year from now, you'll thank yourself for taking this course, okay? So in closing, contact Pro Trader Strategies. I hope you can see the power and strength in these two rules that I just shared with you today. In fact, I would advise you to go back and see how they could have helped your trading this past year. And I really think once you see how powerful the 50-period moving average and then finding where bars close either in the top or bottom 25%, you'll be ready to jump on board with the college, because those are just they're just a minuscule part of what we offer in the college. And you'll see the power in these simple things that we teach you, okay? In closing, I want to thank you so much. Remember to contact Pro Trader Strategies. They can fill you in and give you instant access with any type of payment plan. And I want to thank you so much for attending today. And I look forward to all of you becoming students of mine in the Elite Emini Trading College. Thank you so much. I'll see you next time. Bye-bye.